You were listening to chartingwealth.com for Thursday, the 28th of July, 2016. What do we see going on in the market? Because that's what we're all about, forecasting where the market is going. Now that we're teaching you how to read a stock chart, that's where it is. And when you can forecast accurately, that is, you can read patterns just like weathermen do. Are they perfect? No. But most of the time they are right, and all you have to be is right most of the time. That's what we're trying to learn here, is how to read a stock chart. What do we see going on? Well, we start always with the total market. That's represented by IYY, it's an exchange traded fund that tracks the whole market. What do we see going on? Well, the market has been sliding sideways pretty much on our two-day chart since around the 15th of July. We see basically sideways movement on the price chart. We had a two-day trend line. We could try to redraw it. We keep having to redraw it every new two-day candle because the market continues to just slip sideways. We see the derivative oscillator has peaked out. It is smaller than it was on the last two-day chart on the 25th. The MACD and the signal line are getting closer together. The upward movement is slowing down. It had been moving up rapidly around the 13th, the 15th, the 19th, the 21st, those candles on July's chart, but it has started slowing significantly. The market was up for the day, 0.06%. It is still up, but it does look like it's getting long in the tooth. Now, we've seen that before, and the market's gone down a little bit and then shot back even higher. But we care about what the market's doing right now and what it may do in the future. It looks like it's weakening. Now, let's take a look at our 4-hour chart. We've been looking at a jumping in point on an up move. Our 4-hour chart, we see the Bollinger Bands that are represented by blue dashes on our charts. And for all the new folks, if you don't have our layout that we use freestockcharts.com. That is, and again, it's free. Everything we do here doesn't cost you anything, okay? If you want to subscribe to TC2000, which Free Stock Charts offers, you can do that, but you don't have to. But we have a layout that is available if you go to chartingwealth.com. You sign up for our newsletter for free. We're not selling you anything there either. Isn't that amazing? And you sign up, you will get a link you'll see in the first email, and every email you get subsequently, it'll always be updated with the latest chart that we're using. You will get a layout for the charts. All you have to do is sign up for your free account at freestockcharts.com, then use the link that we provide you as a layout, save it. In fact, we have instructions on exactly how to do this on the first email, and every email you'll get for every day that we review the charts, you'll see the link there for the freestockcharts.com charting wealth layout. A lot to say there. So let's talk about what we're seeing with these Bollinger Bands. They are getting tighter and tighter and tighter. It means that volatility is slowing. The market is getting very less volatile, and we've been at the top of the Bollinger Bands here for 2 days now, actually probably longer than that, as the Bollinger Bands tighten up. Now, what's the market doing? Well, the 4-hour chart is in a down move. In fact, that down move continues. We haven't had a pullback for an up move yet. We're still confirmed up move on the big chart. We've got what we hoped would simply be a pullback, and then when it crossed back over going up, we would jump in. May still do that. We haven't seen that happen yet. We're watching, paying attention. So that's where we are on the total market. We're going to range back out on our 2-day chart. Take a look at the S&P 500. It was down for the day, 0.1%, so 0.1%. We can see also, like the total market, derivative oscillator lost some energy. And we have as far as the rapid pace of up movement in the MACD and the signal line, that is slowing, and they are slowly approaching, coming together. Still in a confirmed up move, but again, the market's getting long in the tooth. When we look at the 4-hour chart on the S&P 500 as represented by SPY, what do we see? Well, we've broken throughout the course of the day our old 2-day trend line, and we continue to see that down move in the 4-hour chart. So we haven't had that pullback end and a resumption of up movement. So we may have a new trend of down movement, although we could have something happen that really jacks the market up. We'll just have to wait and see. We don't have a trade at this point. Now we're going to look at the Qs. That is the technology, the NASDAQ 100. That's what QQQ represents by power shares. What do we see going? Well, it continues to move up. Its movement is stronger. The derivative oscillator actually got a little bit bigger today. And again, the Qs was up 0.69%, literally 10 times what the total market was up, and many more times that for the S&P 500 that was down 10% or 0.1%. So what do we see going on with the Qs? Continue to see build up. Let's check out what we see on our 4-hour chart. We don't yet have that correction we have been looking for, but man, throughout the course of the day, we had the derivative oscillator pop back over into the positive big time in the morning and the afternoon. Again, tempered some of that upward momentum in the morning, in the afternoon, but still the Qs was up 0.69%. Don't yet have, though, the confirmation yet crossover. So we'll be watching and seeing if indeed that occurs and when. So keep your eyes out on that. Those of you who are using the Hikinashi pullbacks as far as your candlestick goes and the moving back over, that probably worked okay for you at any of the points where it went red and then green again. You found good entry points there. So we'll continue to watch and see. Again, this is all about practicing. We're not using real money. You're learning how to read these charts. And once you get good enough, you can use all the real money you want when you make your own decisions. Remember, we're not a stock calling service. We are an education firm. Now let's look at gold lastly on the 2-day chart. What do we see on gold? Well, it crossed over back on the 25th, going down. It then is trying to cross back over. It actually killed our 2-day trend line throughout the course of the new candle. The gold was up 1.63% for the day. That's a big up move on the day on gold. What do we see then going on? The MACD has not yet crossed over, going back up. Derivative oscillator actually gained more energy on the down move. So have to wait and see what's really happening with gold. Even though it was up for the day, derivative oscillator continued to gain downward momentum. We do not have a crossover yet. Let's look at the 4-hour chart. Now remember, we're in a confirmed down move on gold, and we've had a crossover going up. So again, if this is the pullback, remember it's the opposite of a chart that's moving up. When you have a chart that's moving down, the pullback is up. So it has pulled back away from the big trend going up because the big trend's going down. If and when we see a cross back over on the 4-hour chart, which is what we're looking at now for gold, that would be the time to try to enter and ride that continuing trend, that continuing big trend. That is where we are as we wrap up looking at the charts on Wednesday, getting ready for Thursday, the 28th of July. We always appreciate you being with us. Thank you so much for everybody who's been going and subscribing to the YouTube channel. We are getting closer and closer, almost to 800 subscribers now. When we get to 1,000, those of you who are subscribers will be entitled to our proprietary broadcast. That's why we're asking you to go to YouTube, to our Charting Wealth channel, and just click subscribe. Please help us out there. If you also appreciate what we do for you free every day the market's open, plus the weekly review and forecast we do once a week over the weekend, could you go to iTunes also, give us a 5-star rating, and subscribe to our podcast? We really appreciate, and then listen every day. It also matters that you don't just subscribe, but you listen. Part of what you need to do for yourself is listen, follow along with us. If you don't already have our daily worksheet, you need the daily worksheets. They're also available to our subscribers. You can see them at the YouTube channel. We also have them loaded up under the comments at the iTunes for iTunes subscribers. You'll see the link there. It'll take you to our website, and you can print off the PDF, print off several of them so you can run through them every single day and keep up with these markets. One reason we have it for you to fill out analog, that is by hand with a pen or a pencil, is because there's nothing like using your brain to take what you're seeing on the screen and then annotate it down on a real piece of paper, making the markings, thinking in your head, and writing down just what's going on. You'll be amazed at how much more quickly you will become better at this if you will, besides just listening to us every day and or watching us, also making sure you take down your own little set of notes as we're going through it. So in other words, it's no more work. It's just making sure you do this as we talk about the charts. It will help you immensely, guarantee it. And remember, once you get good at this stuff, the world is your oyster. Okay, if you can read a stock chart, you can navigate these markets. You can be just like the big guys up on Wall Street. Okay, you don't have to be up there. If you can read a stock chart, and remember, what do stocks do? They either go up or down. And if you can use these charts to help you figure out that binary decision, yes or no, imagine what kind of power and wealth that can bring you. And you can do it. You can do it. You just have to spend the time in the trenches practicing, paying attention, and learning it. It is not rocket science. Some of the best people I know who are traders in the market have the least amount of formal education because they just pay attention. They don't think they know everything. They know they have to learn, and that's what you got to do. Thank you so much for listening to us. We always love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, and iTunes, of course. You name it, we try to be there. Chartingwealth.com is where you can find all of our information and sign up for this daily podcast, videocast, audiocast, whichever you want. Thank you so much. God bless you. We always love to hear from you at chartingwealth.com.